The world runs on confidence. Lose that, and even the strongest currency turns into fancy paper overnight. Empires have burned, banks have frozen accounts, and entire economies have vanished in a season. Yet one thing has crossed centuries of chaos without losing its shine. Gold. Today we're diving deep into a clash of systems. Medieval gold versus modern money. Which one actually survives when everything else falls apart? Welcome back to Ancient Roots Uncovered. Let's get straight into it. In the medieval world, wealth was something you could touch. Coins rang when dropped. Jewellery weighed heavy in the hand. Treasure sat locked in chests, not numbers on a screen. Gold worked because it was rare, durable, and universally desired. It didn't rust, it didn't decay, it didn't depend on a king's promise or a banker's spreadsheet. Merchants crossing continents trusted gold because everyone else trusted it too. A trader from Europe could sail to North Africa or Asia and still exchange gold for goods. No translation needed. No central authority required. Gold was trust made physical. And when kingdoms collapsed, gold didn't collapse with them. When cities burned or rulers were overthrown, gold coins remained valuable the next morning. The metal outlived the power structures built around it. That's not nostalgia talking. That's historical pattern. Modern money isn't about metal. It's about belief. Most currencies today are what economists call fiat. Their value comes from government backing, taxation systems, and collective faith. A banknote is valuable because society agrees it is. That agreement holds until it doesn't. Digital banking took this one step further. Now, wealth often exists only as numbers in databases. It moves at light speed, fueling global trade and honestly allowing economies to scale beyond anything medieval societies could ever imagine. But, it also means modern money depends on systems that must keep functioning. Things like electricity, internet infrastructure, political stability, and of course, institutional trust. History shows those pillars can crack. Inflation in the 1920s in Germany wiped out savings almost overnight. More recently, hyperinflation in Zimbabwe turned billion-dollar banknotes into souvenirs. Even strong economies like the United States have faced banking freezes, recessions, and currency shocks. Modern money is powerful, but it's fragile in ways medieval gold never was. Gold thrives on instability. When markets panic, gold prices tend to surge. Investors flee uncertainty and run toward assets that don't depend on institutions. That pattern repeats again and again. Wars, financial crises, political turmoil. Gold rises when confidence falls. Why? Because gold has no counterparty risk. A gold coin doesn't rely on a bank staying solvent. It doesn't need software updates. It doesn't care about debt ceilings or monetary policy. It simply exists. That simplicity becomes incredibly valuable when systems fail. Medieval societies understood this instinctively. Wealth stored in land could be seized. Wealth stored in currency could be debased by rulers mixing cheaper metals into coins. But pure gold remained pure gold. It carried value across borders and across centuries. Let's be real, though. Gold isn't perfect. You can't pay online subscriptions with it. You can't instantly transfer it across the globe. Modern economies rely on liquidity, speed and scalability. Digital money excels at all three. Modern currency allows massive infrastructure projects, global supply chains and rapid innovation. Without flexible monetary systems, the modern world simply wouldn't function. Gold alone cannot support a complex interconnected economy of billions. So in stable times, modern money wins. It's faster, easier, more adaptable. Gold is slow and inconvenient by comparison. But stability is the key phrase there. When systems break, people return to fundamentals. Throughout history, during sieges, invasions, and state failures, trade reverts to tangible goods, food, tools, precious metals. Items with intrinsic value replace abstract promises. Gold's survival advantage isn't about everyday convenience. It's about last resort reliability. When trust disappears, gold doesn't need rebuilding. It simply resumes its role as universal wealth. Medieval societies didn't choose gold out of tradition. They chose it because it worked under pressure. Their world was unpredictable, fragmented, and often violent. They needed wealth that could move with them and survive upheaval. That's exactly the scenario where gold still shines today. So, which survives the next collapse? The honest answer isn't one or the other. It's both, but at different stages. Modern money dominates during stability. It powers growth, trade, and technological progress. Gold dominates during crisis. It preserves wealth when systems falter. Think of it like this. Modern currency is the engine of civilization. Gold is the emergency lifeboat. You hope you never need the lifeboat, but history suggests it's wise to know where it is. If a major collapse ever came, digital balances could freeze, banks could close, and currencies could spiral. But a gold coin would still be a gold coin, just as it was in the medieval world. That's the quiet lesson buried in centuries of history. Systems change, technology evolves, empires rise and fall, but some forms of wealth outlast them all. If you enjoy uncovering the deep lessons hidden in history, make sure to subscribe to Ancient Roots Uncovered and share this video with someone who loves the past as much as you do. Because sometimes the oldest truths are the ones that matter most when the future gets uncertain.